Hey guys, it's the Crypto Sniper. Yes, coming at you a little bit away from home, on and around. Update on crypto following the Bitcoin pullback. Yes, well, good news. I come bearing gifts. So while it's pulling back, there's not too much to say until we have some cause for optimism or change. But it's going to start somewhere else. So we did a YouTube on the Market Sniper. Remember to sub and like the Market Sniper as well. Same place, red background, ooh, mustard seats. That's right. So we were highlighting the fact that in actual fact on the what time frame where we were on the daily there, that you're actually been in a dollar appreciation phase, and at the same time we were highlighting that the gold's very strong move to the upside was actually in a pullback phase, very similar to a falling wedge, which is what we were highlighting. So you're saying crypto channel, and he's talking about gold and the dollar. Yes, yes, and yes. The gold is the God market, my friends, the God market. That's right, coming at you of anti-fiats. So it turns and moves first. And that's when we get the point that you might get some dollar weakness, you might get some gold upside, and that will bring around Bitcoin. Bitcoin follows Julie. I'm afraid that's the way it is. That's not me being a shiller for Peter Schiff. It follows. It doesn't go up as fast normally. It won't go as far as quickly. It's a bigger market cap, etc., etc. But when it comes to sniffing out the anti-dollar, the anti-fiat, gold is first, because big money, central banks are the big money, and they move first. They're not saying, hey, get me on Binance and buy some Bitcoin. They are accumulating gold. So the big movers. And of course, it's the first go-to, and it's a long-standing relationship. So with that, this was the chart that we were highlighting this morning and talking about in that video that we showed you there. On the Market Sniper, the dollar getting weak, and also what we expected to have happen. Let's leave the dollar for a second. I went on about that dollar for a while, didn't I? There it is, going up. Here we go. This is the bigger move that we're in on gold. This is on the 4 hour up top there. And this is the squeezy Japanesey that I'm drawing for you. And the fact that we still have a target at 2,209 to CB hit. We hope to have it overrun, of course, in due course, but we've got structures that are set up for that. And this turned out to, in our view, to be a falling wedge continuation pattern that we then subsequently dropped down into and gave you the lowdown and actually gave entries there for the gold trade. This was, of course, first given to our community, so they got first dibs and were prepped and ready for it. This went out when it went out earlier on today. I'm recording this now. It's almost midnight here where I am. And as a result, some guys may have got along on that. So going back to why this in terms of crypto, gold's bullishness that subsequently has come. Let's have a look and show you. Bing, bada bing. Nice little squirt, erectile projectile. Yeah, baby. Oh, waking up with wood. And there it is. Going, and she's on the trot. So very good for the anti-fiat. And this was the good news is, for crypto, is this will bring about the turn, which also should have also pointed to potentially a spate of weakness in the dollar. And here we go. There was that chart I was pointing to and suggesting that the weakness may come in for the dollar market. And there's a kind of channel in there. There's a little bit of our splitter through the middle there, and you could have picked it up on the break of the splitter if you're a shorter on the currency side, and it's run all the way through the downside. Don't forget also, we highlighted this was a return move. Sorry about that. Return move to the neckline 102.5, which was earlier, and we were illustrating that in the Market Sniper video. So technical analysis doesn't just apply on crypto, by the way. It was born in the hellfire of FX and equities, a lot longer earlier market. So that was that reversal, and there's that neckline in the blue. There's a nice hammer that was the point at which it was done coming down, and that was the beginning of a slowdown for Bitcoin, and of course the pullback in the falling wedge for gold. So now we've got a great rejection here. you got one wick there when it rejected on the upside, and you got an even bigger wick and a follow through to break down. That's known as an engulfing almost. I think that is at the same level candle body or higher, so it's engulfed the body of the previous candle, plus you got that rejection wick in there, which is super powerful. So that could mean a little bit more downside, and this means reflation for Bitcoin. So now, having said all of that, let's get to the crypto part, which is the bit you want, and we'll clean our face a little bit of our overlay jaws and say, there you go, there's your downward channel, and here is equally strong at look to the downside wick rejection up to the upside. And of course our capping descending grind line, which was interacted with a couple of times here, here, and here. Now you're seeing the potential for that to be broken, and that could begin the beginning of the up move. The other element that we pointed out inside our community, first link below, book and have a call to chat to get on the waiting list to potentially join, is the fact that you move very strongly out of your last continuation pattern up to here, and then you funneled out into a small time frame HVF, as you can see there, squeezy Japanesey. You had that little test that came down, and then the rest of this is much more of a grind. So here was your strong move, that's your flag pole. Some would say pennant here. It was a small time frame HVF for us, but then the rest of this move was kind of all grindage up into the 74. So you needed to respect the fact that you ran the 69k, and we were calling for that to say you're going to have probably just run the previous high and have some pullback. In fact, it went a little bit further. We drew the previous high in there. There's the 69 line. That was the test and not break. That was a wick break, and then you grinded on through, and then you got here, and it was kind of low vol, but then spank down, bounced on the legacy high, went back up, then down through it, tried to reclaim it, couldn't hold, down, next level that you were holding, the 64k high. So we've spoken twice. We've spoken 200 times about those two highs, the 64k high and the 69k high, and the head and shoulders that went with them. So you guys, unless you're watching our crypto sniper videos for the first time, you know all about that. Those are the book-ended head and shoulders that started the bear market. One that was the warning, and the second that was the final high. Those ultimate highs, tops of the heads, were key levels, and you can see it here. You ran a little bit lower, and you ran that 64. You ran it all the way back up, but still couldn't take back the 69. That pointed to you've still got a bit more downside in you. Down, down, down. You got a bit of a spiller here. You smash through it again, attempt to retake lower, and here you come. So the fact that you've dealt with the 64k high here quite impulsively to the upside is a good thing. What we're looking for now is that channel, the red line to break, the thin red line rather than my fat TG Koki, and we would then expect some form of interaction potentially again at the 69. Why? Because you showed it from the very first time you wicked out there, from the second time you just ran and wicked out over there, and then eventually going just over it and then just below it, and then finally squeezing into a rising wedge, smashing down to it, then through it, and then failing to hold it on the return move, and then resistance here. You can see these key levels of significance, and people that don't highlight these, particularly they'll have forgotten of the 64,854, almost 65 by the way. That's on Binance. It will vary by exchange, as you know, by a couple $100. But those are two key levels. So getting back into that range of these two legacy highs is a good thing. What do I end up thinking will happen? You know what I'd most like to see happen? I'd like to see us get back into the 70s but not make a new high, and then plateau out a little bit, and then come back down a little bit and make a second impulse. I'd like a nice big juicy upside HVF where that would be a second, my Greek Z for 2, second impulse, come a bit down and give us a massive, let's use another color in the future, squeezy Japanesey. However, I'm not sure that will happen. The tendency to make new highs is strong, and you know, if there's still so much of these Bitcoin ETFs, where's all that buying gone? Should show up again. So that's a little bit on Bitcoin. what I see happening. So I actually think this is going to reflate, and I'm long on the break here. In fact, I got in a little earlier the minute I saw gold was going to do what I expected it to do, and that allowed us to get in and around just north of the 64s after this dip. And that I'm hoping we'll see a little bit of a move to the upside. I don't expect it to have to deliver me a new high out of this, but it could. So I'm thinking I'll start lightening up a little bit on leverage when I get into the 70-72 range, but I might hold in case it carries on trucking. What often happens is you get the rising wedge climb, which is very much like that. So you could get something like that again. Take a while for that to occur, but you could do that and then squeeze along and go higher until eventually you get another correction, as you did here. Boom, bosh, bosh. That tends to be what happens with retail traders because they come up and they buy the momentum. So the lows get bought up and they chase up under a market until they exhaust. The bid stack doesn't thicken up enough, and then eventually once that buying is petered out, there's a bit of an air pocket for any profit taking of any scale to see a bit of a sell-off. Okay, so that's your Crypto Sniper update. That is Bitcoin. Which other tokens we'll be getting into, as I say, first link below, you can come and find out what we're talking about that could be big runners in that space outside of Bitcoin. Have a clue, look at those dominance charts just as an idea. But generally, as gold runs for the anti-fiat, so Bitcoin is probably one of the safer to start with as a new turn after a pullback. However, in due course, those that were relatively strong prior to the correction and held up a bit better could end up again being outperformers. Who those are, you're going to have to do that for yourself or wait for further updates from us on this channel. I hope you enjoyed it. Don't forget, hit subscribe, and always, because we are naughty sometimes and the algorithm don't like us. So leave a comment and tell us, what do you think? Where's Bitcoin topping out? New high? Or 70-72 range, and then another winding up, squaring up, nice big juicy structure. By the way, just on that point, that high was almost 74 and the low was, I think, 61. Let's just get the round number. What was the low? Sub 61, and the high was just sub 74. So overall, that's about a $13,000 correction. That would give a nice juicy amplitude to be projecting up from about 70,000. That would take you into the mid-80s. Low mid-80s, which could be very nice. Bit of overperformance, could be really nice. Or do you think we're just going to squeeze up in the rising wedge? Rising wedge high, normal trade up, new high, some of it quite spiky and impulsive. Those are the two options. And the third option, will we do a bigger continuation pattern a la my great wish? Either way, I'll trade what the market gives me, and I will adjust my strategy according to that. The price is your best indicator. Remember that. Patterns are your best friend, and judicious use of volume-based indicators can be very, very supportive. Okay, hope you're making some bank out there. Hit the shares, hit the likes, tell us which of the three options you think it's going to be, and we'll catch you next time. Thanks for watching.